So with big institutions like JPMorgan Chase, Fidelity, BlackRock, Inc., etc., jumping on the bandwagon, allowing Bitcoin to be used as a form of collateral for lending transactions, primarily at this point in time with institutional clients, that begs the question, will we soon see loans or lending products on the marketplace allowing us to leverage ourselves into crypto? That's a question we have to answer in this video. So to give some context around this change, many of you may be aware, I also shot a live stream recently that JPMorgan announced that by the end of 2025, at the time of this recording, it will be allowing its institutional clients to use direct holdings of Bitcoin as collateral for lending transactions. This isn't necessarily new or revolutionary. Other platforms that I've mentioned and institutions I've mentioned are allowing the same thing or some variation of the same thing. But it's a big deal when the biggest bank in the country and one of the biggest banks in the world jumps on this bandwagon, especially when the CEO himself, Jamie Dimon, has been against Bitcoin and cryptocurrency up to this point in time, or at least up until recent times. That having been said, this is an unprecedented move overall to validate the existence, the value of cryptocurrency in our financial system. It validates that Bitcoin, Ether, and the concept of cryptocurrency as a financial asset is official. But the question now comes in, will these same traditional banks allow, institutional investors or even everyday retail investors and clients to use their crypto holdings to acquire loans or some form of leverage to acquire cryptocurrency like Bitcoin? That's the question. And the answer to that question is no. But for context purposes, let's talk about when this kind of change may take place. Backing up a little bit, it's important to understand when you have any new emerging financial instrument jumping into the system, banks are going to jump all over it to find a way to democratize it and put it out to the masses so they can start making money off of it, to be frank. And what I mean by that in more plain English is the second something comes into the financial space that can be a lending tool, an investment tool, banks and brokers are looking for opportunities to create products that will allow everyday people, business owners, investors to get their hands on it and use it as a financial tool or instrument for their own financial gain while the banks themselves make some kind of money in between, whether that's borrowing from the bank or investing with a broker or a bank. Anytime you see new products or, you see something else come into the marketplace, then you can be certain that banks will try to find a way to get it out to a larger market of people because that's a broader opportunity to make money. Cryptocurrency is kind of starting to creep into that space where, especially in the current administration we have in the government, it's becoming a real mainstream financial instrument. It's not just some, far off digital currency thing that only geeks and, computer nerds are using. It's becoming something that is becoming more widely accepted, and it is being used as a medium of exchange in the financial system. And so you can be certain banks will continue to find ways to build products around that, just like the government's going to find ways to tax it. And so it's a fair question to ask. Y'all are allowing it to be used as collateral for lending products. Is it possible that it has enough viability to be used to borrow money to get into this asset? Let's discuss a couple reasons why at the time of this recording, there are no official loans and lines of credit or credit cards allowing you to purchase Bitcoin directly in that capacity. Now, to be clear, before we do so, there's a few platforms that allow for you to use it as collateral on the, retail level, meaning you and I as the everyday person. Right now, a lot of the bigger banks are allowing this for institutional investors. So that's like sovereign wealth funds of countries and, really large corporations. These are like the big boys. We're talking about people like yourself and I who, are on Main Street, if you will. You have platforms like Lend, like LEDN, or not Lend, but Ledin, Nexo, Exchange Capital, Figure, Salt Lending, Coinbase, for eligible users. These are small platforms that are like allowing crypto trading, etc., or purchasing, but they're allowing you to collateralize your existing crypto holdings on those platforms as a form of, collateral for leverage. So before you can access capital. So that having been said, those things exist already. What we're looking for is to keep our eyes out when banks will allow traditional lending around cryptocurrency. This channel, this platform has been strictly around relationship banking and maximizing your borrowing capacity, which is basically developing very, very healthy relationships with banks and lenders and all of the financial metrics and habits that go into that and behaviors, as well as maximizing your borrowing capacity, because we're looking to build wealth strategically, patiently, but we're looking to execute with speed. And the only way to really be fast and efficient in this economy is to use leverage at the end of the day. So this channel has taught a plethora of different ways for you to take, your everyday financial habits and even some more complex financial strategies to access capital to get into assets or to start, grow, or fund a business. Now that cryptocurrency is entering the fray as a legitimate asset class, it's time for us to start figuring out how we can get our hands on it responsibly, strategically, but if we don't have the disposable income to get our hands on it. So, a couple reasons why traditional banks have not jumped on this bandwagon are pretty straightforward. And really, it's coming down primarily to two big reasons: volatility and regulations. Volatility from the perspective that it is clear Bitcoin, Ether, some of these more prominent cryptocurrencies are likely here to stay and that they're going to go up in value. The problem is there's no predictability around that, like whatsoever at the time of this recording. That is not a fair baseline for banks to create traditional type lending products around that asset class because there's a lack of stability. And banks will lose their shirt just like a lot of individuals are out here losing their shirt playing around with crypto. So that lack of stability and predictability makes crypto exciting, Bitcoin exciting. It also means that the upside potential could be enormous, but it also means the downside could be insane. And that is not a good formula for banks to create lending products off of. So that's number one. Number two is regulations. Regulation has not allowed for traditional banks, who are the most regulated financial institutions in the country of all different sorts. Traditional brick and mortar banks that we're familiar with have to follow the most regulations. And right now, regulation has not allowed for banks to even get in the realm of creating products or, or creating lending products or securitizing, cryptocurrency or Bitcoins in a way that allows loans to be put out to purchase them or to acquire Bitcoin yet. So regulations haven't caught up to this yet, probably partly for the same reason, the lack of stability and the use cases around this right now for, again, everyday Americans at scale. So we want to keep our eyes out for this. I'll even throw a bonus out there and say that this does not produce income at the time of this recording. Bitcoin does not, generally speaking, nor does any other known cryptocurrency currently allow any type of income flow to service debt. So that's another big factor to keep in mind. You think about the assets that we're allowed to get loans for that are like, completely accepted by the mainstream financial space. You think real estate, you think to some variation stocks, and you think businesses, right? These all have the ability to be moderately predictable in their growth or their downturns. But more importantly, they have the ability to all create income. Real estate clearly has several different ways to generate income. Stocks, you can potentially get dividends, you can potentially get income from, but and you can do things like borrow from certain positions or take short positions and things like that with stocks. Same thing with businesses. Businesses generate revenue, they generate income. So it's easier to create lending products at scale around these different asset classes. It's not the case with cryptocurrency and Bitcoin at the time of this recording. So that's kind of a bonus of the two major reasons. That's another reason why that's not something that is coming down the pike at the moment. It's, too volatile. There's not regulations in place or a lack of regulations to allow lending on those products yet. And it doesn't really generate any income that can be relied upon, if that makes sense. So I wanted to put this out there because it's getting, really interesting watching Bitcoin get adopted, and crypto get adopted on the mainstream level slowly but surely. And I know a lot of people are extremely excited or terrified about cryptocurrencies. I know some of you probably would love to, be able to borrow a fixed rate loan on a crypto portfolio or Bitcoin, portfolio. But at the end of the day, that's not something that's in the works yet. But I do want y'all to comment down below and let me know what you think. What do you know about cryptocurrency? What's your position, your stance, or your current, do you have a portfolio of cryptocurrency? Are you invested in that at all? What's your current stance and viewpoint on Bitcoin, on cryptocurrencies as a whole? And would you take a loan out to acquire it if it were available? I'm just really curious to know. Comment down below. To all my pioneers, welcome back. To my new viewers, welcome in. I want you to go in the description down below if you want to tie in with me on Instagram. We're slowly branching out there. And I want you to like, comment, share, subscribe, support the channel so the channel can continue to support you, putting out, quality information, insights, strategies, etc., to help you advance your finances, increase your net worth so you can increase your overall quality of life. So make sure you support the video. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.